You know, in the short term, you end up getting a bumper crop of profits for airlines when oil prices drop. Over to medium and long term, what ends up happening usually when oil prices fall is airlines put more capacity into the marketplace, which is a perfectly rational thing to do. It becomes more of a fixed cost industry, become more productive. But that does put downward pressure ultimately on airfares. But right now, yeah, people flying around on tickets they bought back when oil was, was 30% more expensive than it is right now. And the differential between that, those oil prices and where they are now goes straight to the bottom lines of U.S. airlines, especially those that are unhedged.
Of the four majors, that's what I want to say. You said unhedged. Of basically the four majors, whatever number you want to put it at, who is the best positioned given the way they have hedged their oil prices?
Yeah, well, Delta, American, and United basically at this point. Yeah, well, that's the easier question to answer. Southwest is the one that still hedges. So, when oil was pricier, that kind of gave them a buffer that the others didn't have. Now you're in a situation where Southwest, although they don't hedge as aggressively as they once did, as other airlines around the world do, they still have an active hedging program. So this is best of those four for Delta, American, and United.
Is there one airline right now you think that is, from an operational perspective, that you think is just doing better than everybody else?
Yeah, well, Delta still is. They've kind of done that for years and gotten to a point where it's hard to improve a lot more than where they've been, although they say they can. United's made a lot of progress here over the past year or so. American is the one that's still kind of struggling to catch up. On the other hand, that kind of gives it the most room for improvement if it's able to achieve that as it says it can.
Hey, Seth, most of the airlines are still acting like rational actors in that you haven't seen a huge rush of capacity, someone just try to go out there and basically buy market share. And that's what has happened historically, which has put a lot of pressure on airlines. And this has actually been very good for airline stocks because everybody's acted this way. But there's something almost irrational about the fact that, to me, nobody's tried this. Do you think somebody will?
Well, United is growing a bit more quickly than the others, and United's president, Scott Kirby, who a couple years ago came over from American, has basically said, look, this all went too far, and we're leaving opportunities on the table. So, they're sort of growing more mid-single digits as opposed to United or Delta, but certainly, nothing like what we would have seen in past years, and they've sort of said there's such a thing as good growth, and that's what they're doing. They felt like their domestic network was under scheduled, but this is a consolidated industry, and this is what the CEOs of all these airlines said back when they were preaching consolidation. They said, look, it's still going to be competitive, but it's going to be an industry that can survive in any market conditions, and so far they've been right.
Seth, very, very quickly, the tiered classes, business first, coach, in this market, given the volatility and also businesses and expensing things, if you worry about a recession coming, do you have any expectation that companies are going to curtail the travel of their employees?
Yeah, and that there is the flip side of what we've seen here in recent years. The transatlantic market has been extraordinarily strong, especially thanks to that premium demand you're talking about, and in turn, that is what's most sensitive. So that's the kind of thing where, if you are Delta especially, which has done so well capturing that demand, it appears American and United to significant, if slightly lesser degrees, that's what you start to worry more about.